So there's a proposal at the moment going around the Conservative Party that we do a no deal exit, but it's a managed no deal. And it would mean that we would agree to pay the European Union the 39 billion in the exit agreement, and in return they would extend, because at the moment under our exit agreement things will stay the same for the next 2 years. Now the proposal is that we have an extra year, so all the regulations, tariffs, everything stays the same for the next 3 years, and we have 3 years, so we leave on time, pay 39 billion, everything stays the same for the next 3 years, and we have 3 years to work out the new trade deal arrangements. Now that's got a lot of support, and it sounds like no deal. I absolutely love it, because it would mean that we would leave with no deal, and all those people who say the world is ending would be proved wrong. But we would leave on time as well, and we would keep the European Union happy because we've paid the money. So now, in FX, the biggest thing in a pair like the euro-pound is flow. Okay, for example, when Cadbury's was bought by an American company, pound dollar was sold for weeks and weeks on the back of it. When everybody thought that there was going to be a French nuclear deal where a French nuclear company was going to build a plant in the UK that was going to cost billions of euros, then everybody, the pound was sold and the euro was bought. So there are people who trade at institutions just based on flow. They look at company deals. For example, when Vodafone sold its American division, the pound against the dollar rallied like mad, front running ahead of the Vodafone deal, because there would be so much flow from the dollar to the pound. So let me tell you, in euro pound cross, 39 billion to the EU is a big deal. So long term, if that deal comes off, or if that deal is announced, we will see, I think, that this one rally. And I'm starting to think that this looks like sort of 5 waves up here and a bit of a bull flag. So where are we going to buy it for the next swing if that deal gets done? So if we break this support, 83.72 is where I'm going to be looking. I think this looks like a big consolidation. But so that's just what I just thought I'd mention that, because I don't think people talk about flow enough in FX, and it is a factor. It's a big deal factor. Nobody's talking about the deal either, so maybe it'll come to nothing. But it is one that's doing the rounds at the moment and may happen. So short term in euro pound, so I've waffled on enough. Short term in euro pound, these lows have held again. Now, does that mean that we've just done an ABC and we're going to have another leg of rally and I've just talked a load of rubbish? Probably. Anything that means we don't have to pay 39 billion that people have been pricing in would be very bullish for the pound, and anything that involves us paying 39 billion into euros would be very bullish for euro. So that's what to watch out for in this pair. For the most part, I don't think it's good to trade this on, whether who is going to be hurt most by Brexit happening. In the short term, everybody's going to be looking at, are we going to have to pay any money and how much? So wedge consolidation in this one. If we go more than the 236 fib, which we have in this move, then we are probably going to go all the way back to the top of the wedge again. So at the moment we are trading well above that 236 fib, and we've closed above it. So if you want to buy, if you want to buy this, if you want to buy the euro pound because it looks like we're going higher, then any pullbacks to that 236 fib are good support. So 87.33 is where we should be looking. And then our first target is this daily 20 moving average at 88.05. This is the we'll mark, let's just have it as a ladder. And how perfectly do these fibs line up? And then 50% back, and the 200 moving average at 88.64 next. So we're going to look for pullbacks to this 236 fib to buy this euro pound. And if the deal gets announced and people start talking about it, you could see a strong rally in the euro against the pound, and that 39 billion is going to be the reason why.